Getting the money you need to grow is critical to your business. We help you get funding by improving your fundability, building business credit, and accessing loans and credit lines. Uncover and fix the fundability issues that will get you turned down that lenders won't tell you about, so you'll know you can get approved before you even apply. Streamline and simplify your business credit building through a step-by-step process while accessing the largest collection of business credit cards, vendor accounts, and auto financing that actually protect your personal credit and finances. Access every legitimate funding option your business can qualify for now with the help of your own finance specialist. We can help you get the most money to grow your business at the best terms, quickly and easily. Getting the money you need to grow is critical to your business. We help you get funding by improving your fundability, building business credit, and accessing loans and credit lines. Uncover and fix the fundability issues that will get you turned down that lenders won't tell you about, so you'll know you can get approved before you even apply. Streamline and simplify your business credit building through a step-by-step process while accessing the largest collection of business credit cards, vendor accounts, and auto financing that actually protect your personal credit and finances. Access every legitimate funding option your business can qualify for now with the help of your own finance specialist. We can help you get the most money to grow your business at the best terms, quickly and easily.
Hey, what up, folks? Terrence Spencer here. Good to have you guys on. I see some more in the backdrop as well, and really encouraged to have this webinar. This webinar is it's definitely something that I have looked into as a recent way to expose, business credit and how to build business credit. So super encouraged by the opportunity, of course, being able to do this. And so, again, Terrence Spencer, CEO and founder of Expandemonium. And so I've had people ask me, about most people know me from being in the real estate space. And yes, real estate is my primary. That was the primary avenue of my business for many years. And so about 7 years in real estate. And so 7 years of real estate, now embarking on the journey of business credit and business funding. It has opened up many doors, and of course, many opportunities as well. And so my job really is to share that with you. I don't like to be looked at as an expert or specialist in this area. It's good enough for me to be an ambassador, one who represents, and promotes business credit and business funding. I've also had people ask me, Expandemonium, how did you get this crazy name, Expandemonium? So really, some people have gotten confused. They look at the name, they go, I go, just think about the word pandemonium and then add an EX in the beginning. There you go, Expandemonium. And so, me thinking about Expandemonium, I think about the word pandemonium. And, in the word pandemonium, it's more known for just kind of wild and raw excitement. I remember playing college football and had a coach that always, was about pandemonium out on the football field. We're going to do pandemonium. We're going to have pandemonium. And it just kind of rang in my ears. for a long time. And so I thought about, wow, pandemonium was a time too, and my coach would say that, where we would really take our game to the next level. I know in certain circles, pandemonium may have a negative connotation, but doesn't have a negative connotation from where I'm coming from. And so I actually put a definition to it as well. So a definition with expandemonium. So what is expandemonium? And it is the ability to expand your business beyond your wildest dreams. Okay. And that's really what I want you to think about the term expandemonium. That's what you're trying to do when it comes to building your business. And so who this presentation is for, let's go ahead and talk about that, who this presentation is for. It is for, I like to call it the three S's. When I do a one-on-one consultation with someone, I try to figure out which one of the S's they are. And it's really quickly, I can very easily and quickly figure out what S you are. And so the three S's stand for survival mode, sustain mode, or scale mode. Okay. Survival mode, sustain mode, and scale mode is simply this when you look at it from a business perspective. Survival mode is, I'm just trying to keep the doors open. I'm really trying to make sure to get this business off the ground, really gain some momentum. Now, don't get me wrong, you can also be in survival mode because maybe there was, some shifts that were made in your industry, and maybe your company is having a very difficult time sustaining money. And so again, you're also in survival mode because you want to figure out how to get yourself out of the hole and really just get yourself to a place where I like to call sustain mode. Sustain mode is the bills are getting paid. You're bringing in revenue that is able to help you to maybe live comfortably, or just being able to live to a point where you're taking care of your employees, you're taking care of the necessities, you're taking care of your family. And so sustain mode is really where most businesses want to be before they go to that next level, which is scale mode. Scale mode is, I am ready to now launch this business to a completely new level. I'm ready to start hiring employees. I'm ready to start 10xing my business, taking it to a level where I'm leaving a legacy for my family. I'm able to do things like take my business abroad. Maybe I'm just located locally or centrally in a certain area, but I want to expand out. There we go, right? Expand. I want to expand out and do bigger things with my business. And really, those are the three S's that really stand out for me as far as in who this presentation is for. But I also want to make sure I want you to understand clearly who it's not for. Okay. This business is not for people who just want to get loans, lines of credit, and credit cards to run up debt. That is not the purpose of business credit. The purpose of business funding is to allocate funds strategically to increase revenue. And obviously, when you're able to increase revenue in your business and your company, that obviously opens up doors for employment for others to so that you can hire employees, so that you can take your business to a level where, again, you're out of that survival mode, you're getting into that sustain mode and onward to the expand mode. But again, I used to like to tell my kids this, is that every rule and every policy is made because someone did something to produce that policy. Someone did something to produce that rule, should I say. They typically end up flowing in rules and policies in a company based upon how people are behaving and following order. And so we're going to get into this presentation, and I just wanted to make sure I set the framework for you guys. This presentation, I don't want it to last no longer than 30 to 45 minutes. Instead of having a question and answer session, at the very end of this presentation, you'll see an actual QR code where you can schedule yourself a one-on-one consultation. We can talk about some of the questions you may have about this webinar, maybe some things that stand out for you that you really want clarity on. There are some times available for you tomorrow, so I would please implore you to do that by scheduling for tomorrow or any of the days this week. But you want to make sure that this is fresh and top of your list, because again, I'm going to hit on some things in this presentation that I'm sure you're going to be able to understand more of what I talk about when I say sense of urgency. we're in a very pivotal time right now in our nation. We're in a The doors are open. I heard, I'm not sure how many of you are fans of Andrew Tate or if you even like Andrew Tate. I happen to like his business sense and what he brings to the table in regards to business. But one of the things he mentioned is he said, we're in a time in our history right now where everyone can find an opportunity to become wealthy. That has never been done before, where the floodgates are actually open. You just have to find the right market, should I say, the right industry within the right market. And trust me, you will be able to go to levels and heights in your business that you never even thought. And I'm going to share something with you guys that really stood out for me. That even more so it's a standout moment. Um, I'm going to hit the slide first. Let's do this. I'm going to hit on the actual presentation first. That way you guys can stop seeing my ugly face um, and we'll be able to go from here. Okay, so here we go. I'm going to open up also comment section. If you guys can hear me okay, please let me know. I just want to make sure that I'm coming across for you guys. If you do comment, we'll be able to see it. I think I will, should I say. Just let me know if my voice is coming through okay. Okay. So, expandemonium, don't die. Expand, okay? Don't die, expand. Building business credit is not a mystery. That's one of the things that I want you to understand is that sorry, let me put this in real quick just to make sure we're good. Okay. Cool. Building business credit is not a mystery. Okay. And I say that because I had the privilege of being at the Los Angeles Expo and the San Diego Expo this past month and this past week for San Diego. And it was an amazing time. And one of the things that was really, really on my radar that stood out was that I was the only one in the speed networking session that was able, or should I say not able, that was actually promoting business credit. That was an eye opener for me, especially with the fact that the things that I'm going to show you is going to really just stand out big time in regards to business credit itself. And so, again, this is one of the most viable opportunities out there. And so I want to make sure that I spread the word as much as possible. Fact or fiction? Data from the U.S. Census Bureau shows a record-breaking 5,481,437 new businesses were started in 2023. On average, now, again, fact or fiction? Is that a fact or is that a fiction? That's a fact. Okay. Number two, on average, there are 2.35 million businesses started every year. Is that a fact or is that a fiction? That is actually fiction. It's false. There are 4.7 million businesses started every year. Okay, so that's just doubling the amount. So 2.35 million times 2 is 4.7 million. So 4.7 million businesses started every year. Number 3, which is the most important statistic that you need to make sure you understand, is that according to the Bureau of Labor Statistics, nearly 50% of businesses shut down within the first 5 years. If you take that 4.7 million average amount of businesses that get started every year. So 4.7 million businesses, 2.35 million of those within 5 years will shut down. Out of that 2.35 million, within 10 years, 65% will have failed. That now brings that number down to, give or take, 822,000 businesses. Now, taking that 822,000 businesses, only 25% of those new businesses survive to the 15-year mark. That leaves you with, give or take, 205,000 businesses. So, according to the Bureau of Labor Statistics, the number one reason, which we all know this, but again, it's always good to see data. It's good to see facts. The number one reason for failure for these businesses is a lack of capital, lack of cash flow, and a lack of funding. That is the top reason almost over 4 million businesses failed to that 15-year mark. So again, that's pivotal information that you need to be able to understand, which leads me to this next point. Mythbusters. We need to understand what mythbusters are, okay? Now, these are 7 beliefs that people have that we must be able to debunk, okay? Because again, if you have false beliefs, then, that's going to, it's going to put a hamper on things, and that's going to at least, at the very least, slow your growth and slow your expansion of what you're trying to do. So, number one, you need good personal credit to establish business credit. No, let's get the language down. Business credit and business funding are not the same. Business credit is the process, and business funding is the result. I am a huge proponent of the process. I believe in the process. I think the process is super, super important. Many people don't like the process. They love the outcome. I happen to be one that is a teacher and an educator of process. So business credit, again, when you use your social security number, you're personally guaranteeing the loan. And we call that PG for short, personal guarantee. When you use your company's EIN, which is actually your company's social security number, it's just called an EIN, which stands for Employment Identification Number. When you use your company's EIN, you're not personally guaranteeing the loan. Okay. Now, something very important to understand, and I'm going to go into this in a little bit later, is that one of the key principles of being able to establish business credit fast is actually using your PG. Okay. But unfortunately, many business owners do not have good personal credit. And I'll get into that in a moment. But number two, you need to be in business at least 2 to 3 years to get business funding. That's not true. Many lenders will fund startup businesses using a personal guarantee, as I was telling you about before. If you have above average personal credit, meaning a 680 or above, we have lenders that will issue you 0% interest credit cards that report to the business bureaus. Now, here's the trick. And some people don't really understand this or even know this. So here's the trick. Once reported to the business bureaus, that business credit card that you got, and you actually personally guaranteed that business credit card, the trick is once it reports to the business bureau, delete the hard inquiry from your personal credit report. It's not going to delete the account on the business credit side. You just delete the inquiry. So I understand that, I don't want to mess up my personal credit, so I don't want to do a hard inquiry. Yeah, but you don't have to worry about that again if you are getting a high limit, low interest rate, a lot of times 0% interest, anywhere between 6 to 18 months, 0% interest credit cards, and they're able to give you a high limit such as 40, 50, 60, 70, 80,000 and above to be able to use on generating more revenue for your business. Okay. Number three, I've been in business for another myth. I've been in business for a long time, so I must have good business credit. Unfortunately, no. Building business credit is actually intentional. You actually have to strategize and you actually have to follow the rules of engagement in order to build business credit. It's not hard. It is a simple process to do once you have the information, but there are rules of engagement. It is intentional. You actually have to strategically build your business credit. It does not come automatically. Number 4, if your business is generating good revenue, you don't need business funding. False. Revenue is subject to the economic conditions. Here's the way I look at it. We have one more COVID pandemic and revenue will change in a heartbeat. It is what it is, right? Revenue will change just like that if you have, or should I say, if we have another COVID incident. Business funding can be established and used as cushion money if you need that. I don't suggest that, and it's not suggested, but you must understand that you can get business credit at, or should I say, business funding at any time. It is always available once you build out your business credit profile. Okay. Number 5, it takes a long time to build business credit. That is actually not true. Not at all. It takes, now I used to say 4 to 6 months. It actually takes more like 4 to 9 months. And that's not because of the process. That's typically because of the individual. So it takes about 4 to 9 months to build a complete business credit profile. However, depending on you and how diligent you are, that matters more than anything else. If you are diligent about making sure that you get it done, then trust me, it will happen. This is really the hurry up and wait game. I want you to keep that thinking in mind. This is the hurry up and wait game when you're thinking about building business credit. Okay. And I'll explain that a little bit more in a moment. Number 6, just like consumer funding, there is only so much business funding you can get. False. It's a myth buster there. False. Consumer credit and funding is regulated by the Consumer Fair Credit Act. Business credit, on the other hand, is not highly regulated at all. In fact, some people say it's not regulated, but there's no industry that is not regulated. It's just not highly regulated at all. And so I say that for right now. Right now, business credit and funding is not regulated at a high level, not even at a mid level. It's at a very low level. So there is no limit on the amount of funding you can receive. You can get as high as you want, as high as your imagination goes, or you can get as low as you need as well. So it's going to be completely up to you. Number 7, consumer credit and business credit report the same to the bureaus. No, unfortunately, less than 10%. Keep this in mind, guys. Less than 10% of lenders report to the business bureaus. I had this experience firsthand with one of my clients that signed up, and she was very confident that she had a business profile that was already set. And she said, I'm good because I've been paying on these different accounts that I know that they reported to the bureaus. I said, okay, cool. So we actually paid for her Dun & Bradstreet and her Experian report just to see what, or should I say, how many trade lines that she had. And come to find out, she had none. And she was heated. I can tell you right now, she was extremely upset because in her mind, she thought that all this time, these business accounts that she had was reporting. So remember this, less than 10% of lenders report to the business bureau. So you go, well, how do you know? That's where I come in. We're going to be able to show you what actual lenders and vendors report to the business bureaus. We're going to set you up where our software actually has everything in place. It has all the lenders and all the vendors in place that do report to the business credit bureaus. So that way you'll have the opportunity to be able to know where to apply and when to apply. That's where a lot of business owners get in trouble when they start applying for business credit. Is they apply for business credit that is not the credit they should be applying for at that time. So we go by a tiered system: tier 1, tier 2, tier 3, and tier 4. And the tiers are dictated upon which lenders you will qualify for based on the complexities of that particular lender. And so you do not want to do things out of order. So we teach you how to do it in the right order so that you can get approved for the proper lender at the stage that you're at, or should I say at the tier that you're at. Fundability. This is really the nuts and bolts of building business credit. Fundability, and here's the definition. Fundability is a business's current ability to get financing. That's really all it is. You have fundability factors, and those are individual elements that directly impact each of the core principles of a business's fundability. And I'm going to be going through those factors right now so you can see, where do I measure up? This is a good opportunity right now to see where your business measures up. Am I in a place where I can actually start applying for different tier 1 vendors and get guaranteed approvals through these tier 1 vendors because I have my foundation in place? I have my fundability factors all laid out. And I can tell you right now, when I do one-on-one presentations for people, I can tell you that most do not have the foundation set in place. And this is what I mean. Let's go straight through these and let's not waste time. Number one, the best you can have is a physical brick and mortar office. Okay. But if you do not have that, which I don't expect many people to have that, because most clients that I have, they usually work remotely. So they don't need a actual physical address. But if you are in any of the labor intensive businesses, such as trucking, having a restaurant, having an office where you have agents, real estate agents, or anything of the sort where you need an actual physical location, that serves best in the first, which is having a virtual office address. Okay. Not an iPostal or a USPS or a UPS store mailbox or basically a PO box. Not that. Okay. I'm talking about a virtual office address where it actually is a physical address with a unique suite number, such as 2108 N Street, Suite R or Suite 245, at, Sacramento, California. Okay. That's a virtual office address. It has a unique suite number tied to it. You may say, well, why is that important? Here's why it's important. Lenders these days, because of the magic of what we call fintech, stands for finance technology. Most lenders will approve you or deny you based on fintech. So there is an AI system that goes through, and it has an algorithm that will dictate if you have these factors in place that I'm going through right now. If that AI system goes through and starts dissecting your business after you apply for that business, and you show that you have not a virtual office address, but you have some type of home address or you have a PO box, that system will pick it up and automatically it will serve you a denial, period. And then you may wonder, why did I get denied? Because guess what, guys? As I said to you before, business credit and funding is not regulated, or should I say it's not highly regulated or even in a mid-level regulation. It's very low regulated. So a lot of business lenders, they won't even tell you why you got denied. They don't actually have to. They're not part of the consumer side. They're not regulated in that way. So they don't actually have to tell you why they denied you. So as long as you have these areas in place, you don't have to worry about getting denied. So let's get a virtual office address. Number two, business phone number. Typically a toll-free is preferred, 800-888-877-866, et cetera, et cetera. You've seen them, right? Not a cell number, meaning I don't want to have my cell number as the identity and the way to contact my business. Fintech, as I told you before, that algorithm is going to look for a professional number, a number that you have in place that is a number of credibility. A credible number is an 800-888 or 877. So fintech, if they see that you have a cell number tied to your business, again, another denial. There you go. You just got denied. And if you don't know what I'm going through right now, these factors, you're going to scratch your head and wonder why you got denied. Number three, 411 listing. So 411, basically just the national directory must have both listed on, should I say, must have both listed together on the 411 National Registry. What do I mean by that? The virtual office address or physical address and the business phone number. You want to list those on the 411 directory. That way, when the crawlers of these AI systems and the fintech organization and the fintech arena go through and they try to scan to see your business, they see that it is a listed business, which gives you credibility. Okay. Continuing with fundability. Number 4, your information is cohesive. This is a big one, guys. And SOS stands for Secretary of State. So when you formed your entity, whether if it was an LLC, C Corp, or S Corp, you had to put in the business name. It asked for your legal business name, and it actually asked for your DBA, doing business as. Okay. But for right now, we're going to talk about your legal business name, because when you also get your EIN through the IRS, they don't care about your DBA. They want to know what is the legal business name. So let's say that you have, let's use my company, for instance, let's say Expandemonium. So Expandemonium, for when I fill out my entity and I put Expandemonium LLC, if I put Expandemonium LLC and I put my business, my virtual office address, and my Secretary of State, when I fill that out, and then I go get my EIN and I go to the IRS to get my EIN and I put Expandemonium. That's my DBA, by the way. I put Expandemonium and I don't put Expandemonium LLC. I risk getting denied. Why? Because according to the fintech system, it looks like a red flag. It looks like fraud. I have one name over here and I have another name over here. You may say, well, hold on, that's the same name. You're just missing LLC. It's an AI system with an algorithm. It doesn't dictate that. You must have it be the same. In the IRS SS form, it should say Expandemonium LLC. On the SOS form, it should show Expandemonium LLC. And my addresses should be the same. If there is one thing off on the address, I also risk getting denied. Keep that in mind. Business bank account. Lenders will use a database called Checks Systems to analyze your banking information and history. So if you didn't know that, there you go. They use Checks Systems. It looks at your banking history to see how well have you done in your banking. Do you have chargebacks? Do you have insufficient fund accounts? Do you have all these different things that are standing out in the business bank world? So more importantly, though, the fintech is not necessarily so much diving into that in the tier 1, tier 2 vendors that you're going to start off with. It more does that with your higher limit, higher lines of credit, when you're going for an SBA loan, when you're going for bigger, again, lines of credit, higher limits. They're going to use check systems to really look at things. So what you want to do is get that stuff on track now, but make sure your business bank account matches your company legal name. On top of that, make sure that you have it functional. Okay, that it actually has deposits going in and out of the business. Okay, also, website. Make sure that your website matches the product and the service that you are representing. Okay. So website, some people have gotten in trouble with their website, meaning that you have a company that you're representing. Let's say it's a trucking company and you have a website tied to that, but you're showing not the trucking company. You may be showing things that you ship, but there's no trucks on the website. So again, you got to think, guys, make sure that everything lines up correctly. Okay. That your website, it shows exactly what you do. Okay. Also, this is super, super important. This is one of the most important areas that people overlook. And number 7, NAICS code. That stands for the North American Industry Classification System. So your NAICS code, you can pick a high risk NAIC code or a low risk NAICS code. You have to be able to know if your code that is established to your business is high or low. And you may say to yourself, well, Terrence, I don't even know what that is or when I established it. I have no clue. When did that happen? Well, guess what, guys? Your NAICS code was actually asked in one of those areas, 1 through 5 that I spoke about. Guess what? Number 5, your business banker. When you went to go establish your business bank account, your business banker asked you, hey, what is your industry code? Or what industry are you in? And you just told him, you said, hey, I'm in the digital marketing space. Okay, cool. And he picked the code for you because you did not give him a code. The problem with doing that, there are certain lenders that will not lend to you if they do not like your code. If it's a high risk code, they may say, we don't necessarily like this code. So we're either going to limit the amount of funding that we give this business, or we're just not going to lend to them at all. So you have to know which code is best to pick for your business. Okay. Number 8, a lot of people have heard of this. A DUNS number. The gold standard credit bureau in the business credit space is Dun & Bradstreet. Dun & Bradstreet has what is called a DUNS number. That number is a number, the 9-digit number or 7, either 7 or 9 digits, that is connected to your company. And that company, that number is only specific to you. Nobody shares that number. That is your number. It's a DUNS number, and it's connected to Dun & Bradstreet. And that is the way that they will also establish what is called a PAYDEX score to you. PAYDEX, PAYDEX score. And that's a score that ranges from 0 to 100. You want to make sure that that number is at a 76 or higher. That's how you know you have a good DUNS number score, or should I say a good PAYDEX score is 76 and above. Okay. And again, that just goes with being able to have trade lines reporting, which I'm going to get into next. Trade lines reporting that you are in good standing with. And many people don't know what this one is. So I'll go ahead and let you know. It's called a BINS number, BINS. What is a BINS number? A BINS number is simply a business identification number score, and that is Experian. So people didn't know that. So Commercial Experian, which is the other bureau, you have Dun & Bradstreet, Commercial Experian, and you have Commercial Equifax. Those are the 3 business credit bureaus, okay, that monitors your business credit. So BINS number is associated with Experian, and you will have a BINS number, including a IntelliScore. Your IntelliScore is your Experian score. So IntelliScore, that's also another one that ranges from 0 to 100. To have a score of 73 or higher, sometimes 75 or higher in your Experian score is awesome. That will help you to qualify for a lot of lending as long as you keep that score high like that. Okay. So those are the fundability factors that you need to have in place in order for you to start acquiring a great business credit profile associated with getting approvals through different lenders. Now, you can check to see your Experian. You can check to see if your business actually exists with Experian. Here's how you do that. You go to smallbusiness.experian.com. Okay, you don't have to put the /main.aspx, just smallbusiness.experian.com. You put that into the search engine, and you're actually going to see the Commercial Experian database, where it's going to ask you for your company name, city, state. And when you put that in there, the company name, city, and state, and you're going to put, it's also going to add, it's going to be a little button at the bottom. It's going to say my company or other company. You're going to put my company. Okay. When you put my company and you put those things in there, one of 3 results will happen. There will be no result, which means that Experian does not recognize your company. They don't have any type of record of your company. You may say, man, I've been in business for a year, or I've been in business for a year and a half. And what do you mean they don't recognize me? They don't recognize you. Okay. Or number 2, the company name and address appears. That's a good thing. Commercial Experian recognizes that you are a business. Number 3 is what you really want to show up. The company name, address, and under that in yellow, it says with trade lines. That is what's going to appear under the name and address. That's what you want. However, you must make sure that those are actually current. And I'll speak about that in just a moment. Okay. Trade lines. Let's talk about trade lines. A record of activity. What is a trade line? It's a record of activity for any type of credit extended to a borrower and reported to a credit reporting agency. Just like on your consumer credit report, you actually have your business credit report as well. Okay. And so if you go out and you get a Capital One credit card on your personal account, that will show up on TransUnion, Experian, and Equifax, right? In the same way, once you start establishing business credit, you'll have those credit vendors. They will start reporting on Dun & Bradstreet, Commercial Experian, Commercial Equifax, and that will be considered a trade line. Unlike consumer credit, though, in the business credit world, remember I told you this before, and I have to say it twice. Less than 10% of vendors report your activity to the business credit bureaus. So when I told you before on this last slide right here, I said with trade lines at the bottom, when you're looking at with trade lines, you got to make sure that those trade lines are active and that they're in place. Okay. Most lenders that extend credit, here's the thing. Most lenders that extend credit are basing their approval and the amount to lend off of your established trade lines. So once you get past tier one vendors is what we set you up with first, okay? Those vendors will actually approve you as long as your fundability factors are in place. Those lenders will approve you without you having any business credit established. That's the beauty. So they are really your ticket to getting business credit established. They are trade lines that start reporting, okay, immediately. So these lenders, in order to approve you, they're looking at these three things typically. How many trade lines? Once you get past tier one, they're typically looking at how many trade lines you have, how high those trade lines are, and are you paying those trade lines on time? So tier 2, 3, and 4 vendors, they only are really looking at, do you have more than 3 to 5 trade lines? After that, how high are those trade lines? The higher your trade lines, the more these lenders will match. It's funny because they have a lot of FOMO. You know, I call it FOMO, FOMO. That's a new term that I think is out for this generation. FOMO, FOMO, fear of missing out. So these lenders will look to see, oh, Amazon gave him a 10 grand credit limit. I'm going to match that. And so they will literally match. You'll see the mirror and they will match each other according to what your highest limit is, because they have FOMO. They have fear of missing out. They're like, okay, he has a high credit limit with Amazon. And guess what? He's actually paying on time. He or she is paying on time. Well, that's awesome. So if they're paying on time, that means they're going to pay mine on time too. So why should I not give them also 10,000? And that's what they'll do. Okay. They'll give you a credit limit or a credit line that's going to match whatever your highest limit is. Also, lenders like to see you have current and active trade lines on file. So as you start getting up to the upper echelon of trade lines, I'm talking about 8, 9, 10, 12 and above, they're going to look to see, these lenders are going to go, okay, well, he has a lot of trade lines, but are they current and are they active? Meaning that no payment experiences older than 90 days. Okay. So payment experiences are what you're going to see on your business credit report. You want to have payment experiences, which is awesome. These payment experiences will allow you to start looking like a legit business credit profile business. So you'll actually have an established business credit profile. And so you don't want to obviously use that credit that you got from Amazon and spend $100 on it or spend $300 on it and never use it again for 5-6 months. That's not going to help you have an established, healthy business credit profile. You want to be active and you want to use them. Remember, you're going to be using it anyway. Why not use the business credit you get? You're going to pay for it anyway. So pay for it through your business credit to have active and current trade lines. Business credit has 10 to 100 times greater credit capacity compared to personal credit. I didn't say that. That's a quote from SBA.gov. SBA is the Small Business Administration. They quoted that. Business credit has 10 to 100 times greater credit capacity compared to personal credit. So do you think it's important for you to build your business credit? Absolutely. Get it done. Let's talk. Last slide that I'm going to give you guys here before I go into how to contact me for future one-on-one consultations and really answering some more questions for you. This is super important. 3 reasons business owners fail to take action. Number 1, lazy. As I stated earlier, building business credit is a process that takes on average, for those who are diligent, about 4 to 9 months. Many people avoid the work and just want the outcome. With that said, it's easier to make excuses rather than just taking massive action. As I told you earlier, and I told you I would come back to this quote here, this is the hurry up and wait game when it comes to building business credit. So what does that mean, Terrence? That means simply this: hurry up and do everything you're supposed to do. Line up everything correctly. Get your fundability factors in place. Get everything lined up correctly. Whatever you have to redo, resend, amend, if you have a business that is just not structured right, and we show you how to structure it correctly, hurry up and get those things done. Don't procrastinate. Don't wait. Just get it done. And you want to wait for the creditors. You want to wait for the bureaus. You want to wait for the lenders to report. So that's what you're waiting on. You want to wait on them, not wait on you. You hurry up and then you wait on them. This is the hurry up and wait game. Number 2, ignorant, right? And ignorant, I say that lightly because it is. It's lightly. Ignorant is not you're ignorant. I'm not saying that. Ignorant is, so the 3 reasons business owners fail to take action is they may be ignorant. I can tell you that when I was at the Los Angeles Small Business Expo and the San Diego Small Business Expo, I had some people look at me like a deer in headlights when I say my job is to educate business owners how to build business credit to sustain and grow their business to new levels by receiving unlimited business funding. It was like, what? What do you mean? How do you do that? I mean, literally, it was like a deer in headlights. So that just means ignorant, lacking knowledge, information, or awareness about a particular thing. After this presentation, happy to say you are no longer allowed to use this excuse. You cannot say, well, I don't know what business credit is. I don't know how to get help with establishing business credit. That is not an excuse that you can use. Lastly, arrogance. Either you are too comfortable or too independent. If your business is generating good revenue or you're experiencing some level of success, you don't think you need it. Or you may have figured everything out on your own when it comes to your business and you made it happen. So you figure this is no different. And guess what? I can relate to both of those. Unfortunately, I can relate to both. Either you are comfortable or too independent, and I can relate to both. I've been in a position where I've generated good revenue, but here's the thing for me. I was ignorant. I didn't know business credit even existed. I didn't know that it was a thing. I was like those people I was talking to at the at the Small Business Expo. I would have looked at you like a deer in headlights. But I also know what it feels like to be in a place of comfort where your business is rolling on all cylinders. And man, I'm buying everything new, the house, the cars, I'm getting it all because I'm taking care of my business and I'm just really comfortable. So you don't see a need, right? And so we have to remember what I said earlier. Revenue is subject to what? It's subject to the economic conditions. That's what it's subject to. Have another COVID again, we'll see how people's revenue is doing, okay? And also figuring it out. Hey, I'm an old school guy when it comes to, I was raised in that football culture of, the coach, when he yells at you, you can feel the spit going into your face, and people, new athletes, I don't know if they can relate to that, but I definitely came from that era where it was about making it happen, figure it out. And that's the words that my kids, I think, sometimes hate when I talk to them. I always tell my kids, when they say, how do we do this? I say, figure it out. 3 words, figure it out. I don't do it for them. Figure it out. But guess what? In this business, when it comes to business credit, You don't need to figure it out. There is a system in place to help you not only understand how to build business credit, but succeed at building business credit. Okay, so you don't have to figure it out, and you need to get that comfortability out of the way. When you're comfortable, you need to start now building business credit now that you're comfortable, because guess what? You're not under the fire. It always feels good when you're doing something and you're not under the pressure, right, of getting it done. I operate well under pressure, but there are many people who don't operate under well under pressure. So I would advise you, if you are in a comfortable place, get it done. Lastly, how to be proactive. There you are, Terrence Spencer. That is me, founder and CEO of Expandemonium. There is my direct contact information there. My business cell, also my business email, and also my business website. Didn't we just talk about the foundation, right? Everything that, and here it is. When I actually put my Secretary of State and on my IRS, my phone number is 888-373-4545. So you may be saying, oh, look he has a cell number there. He doesn't have the foundation correct. Yes, I do, because on those forms, that's what's there. My 888 number, my credibility number. That's the number I'm giving to you guys so that you can access me. So I'm going to give you an opportunity right now and a time to go ahead and scan that QR code. That QR code is going to lead you to my calendar where you can schedule a free consultation. Okay. I would advise you to schedule that free consultation tomorrow. And I would love to be able to follow up with you then and answer any questions that you may have. Okay. And be able to follow up with any more information that you need. If you need me to discuss this further in detail, I'm happy to do so. Also, really encouraged to let everybody know too, I'm going to be attending the business show. So the business show is another kind of small business expo, but it's going to be 2 to 3 times bigger than the small business expo. It's going to be on October 9th and the 10th. Okay. And there's going to be upwards to 20,000 people there. It's at the Los Angeles Convention Center. And so I'll be attending that and hope to see some of you guys there. Also, another great benefit is I might be speaking for SCORE, capital SCORE, SCORE of Los Angeles. They are a organization where they actually have subject matter experts, which I really don't want to be looked at as that. I'd rather, again, just be known as an ambassador of building business credit and funding. But I'm going to be doing consistent webinars for them and growing my network from there and being able to speak to people on that platform. So hopefully I'll get a chance to speak more even doing these webinars. So just so you know, before we go, let me go ahead and put myself back on too. Okay. Hey guys. I'm going to be doing these webinars twice a month. Okay. Once a month, it's going to be this webinar because there are still a lot of people that need to understand the basics. And as I told you guys before, I'm an advocate of the process. So once a month, I'm going to be, and that's going to be towards the end of the month, like we're doing right now. So once a month, towards the end of the month, I'm going to be doing a basic business credit, business funding webinar. And then in the middle of the month, I'm going to be doing a topic. I'm going to be choosing a topic. I want to get a gauge from you guys to figure out which avenue to take and what to talk about. So, and basically also what I'm getting from the actual, from my clients and from my audience, what is going to be a good topic to discuss. And that'll be done in the middle of the month. So it'll be 2 webinars a month, plus my SCORE webinars, which I'll be starting soon. Plus you'll see me at the Small Business Expos. I'm going to be there in Vegas, October 17th, the Small Business Expo, doing a workshop and setting up an exhibit as well. And so again, I look forward to seeing you guys and talking with you guys tomorrow. Set up your appointment on that QR code and let's catch up. And I look forward to building some great things with you and seeing your business credit profile get established so that you can get the funding you need. And then you'll be talking about this as well. Okay. So let's make it happen, guys. You need anything, let me know. Look forward to hearing from you soon. Take care, you guys. And thank you for those of you who are on. Peace. Talk to you later. Bye.